Briefing Trader, you come under investing and trading, and you come down here under TA page scans. And when you click on this, this is going to bring you to this spreadsheet with a whole bunch of ticker symbols in it each day. And I know this looks a little daunting at first, but trust me, I am a simple man, and everything is very clearly laid out once you take the time just to look at it. So the reason why I created this table was because I am a technical analyst, and I was spending just way too many hours each evening and in the mornings looking for that perfect pattern, looking for that perfect setup. And after many years of just looking at charts over and over and over again, I kind of got accustomed to what I was specifically looking for. And if you just kind of look at the names on the left-hand side, you can see it's shallow pullback shorts and longs, power ups, which are three stocks that are running 3 days or more higher or lower, inside days, inside weeks, a doji day. And if those of you that don't know what a doji is, it's a very narrow, tight range. That's where the open and the close are very close to each other for that day. A doji week would be similar, but it's on a weekly basis. It's a very narrow range week where the open and close are very close to each other for that day. Overbought, oversold. This is really more of a stock that is, compared to its 5-day range, is excessively higher than its 5-day trading range. And the opposite would be oversold, which is compared to its 5-day range. It's on the downside. If you're familiar with Keltner bands or Bollinger bands, these stocks are trading above those outer bands, saying that they're very overbought or oversold. Wide range breakouts, wide range breakdowns, tight consolidations. This is a scan for stocks that are in very narrow ranges over the last few days and few weeks, and typically periods of low volatility for a stock. And those are good to monitor because they will eventually lead to higher volatility. At least that's the theory behind it. And then just 20-day alerts, 50-day alerts, 200-day alerts, just your typical stocks that are trading around right around those vicinities. Down at the bottom over the years, I've attached what I call zippers. And zippers are stocks that are under $20 that are showing strong upward momentum. And these aren't your one-day wonders where they just kind of pop and they come back flying in the next day or two. These are stocks that break out from usually these long-term bases, and then they wind up consolidating, and then they kind of just start slowly trending higher above like a 20-period moving average, 10-day moving average. Bang for your buck. This, over the years, I've actually included, I've always wanted to find what would be the best day trading, scalping stocks. And in theory, it would be stocks that would move significantly intraday, but also have very high average liquidity. So you can easily get in and out with a decent amount of size for quick gains. And so you can see that there are a couple names over here as well. But at the bottom, and this is really I really want to kind of focus on and start this webinar, is a trend signal on the SPY, or the S&P 500 ETF. And I came up with this signal a couple years ago. It's basically off the trends of a weekly, monthly, and daily chart of the SPY. And when all of these things are constructive and the momentum of the price action is positive, you're going to basically be on a green signal. And when it's yellow, when it's flat and they're giving mixing signals, they're basically going to be on a yellow signal, which is neutral. And then when it's pointing down, it's basically going to be more of a bearish environment. And the reason I want to start off with this is because this is going to be basically, it's going to focus your attention. It's going to give you the current state of the market, whether it's in a bullish trend. And if that's the case, if this is green, you don't really particularly want to be paying too much attention on the scans that you could see that are in red, or the more bearish technical scans. So when you're in an uptrend, to see stocks that are in a shallow pullback short, it's probably gonna have limited its downside, even though it's in a downtrend, just because the broader market's probably gonna limit that and cause that stock to somehow maybe even squeeze. Stocks that are overbought in a up market are typically stocks that are showing very strong demand, and they are going to be almost your leaders in the market. Wide range breakdowns in an up market, these are stocks that are usually news related or earnings related. There's something that's going on that's causing these days that's causing these stocks to break below a prior week's low or a 50-day moving average on heavier volume than normal. But again, after a day or two, since you're in an uptrend, they probably tend to reverse and bounce back. So again, just kind of be careful. Always take note of what the overall bigger picture is. If it's red, obviously you want to be focused more on these red scans and less on the green scans. When it's yellow, pretty much everything is fair game. It's yellow, again, it means conflicting signals or a neutral flat momentum. The SPY is usually in a trading range. So when you're at the lower end of a trading range or coming into a key support level, you might want to focus on stocks that are going to break out on the next rally. Or you might want to look at the shallow pullback longs, and vice versa. If you had a resistance level in the SPY, you might want to look at the shallow pullback shorts in that trading range, or look for an overbought stock to short into. So again, you kind of have to take everything into context of where the general market is. But what this is doing is each night you don't have to sit there and scroll through hundreds of charts looking for that right perfect setup. This is going to really kind of focus your attention on stocks that are going to basically move based upon the set criteria that I've established and been trading with over the last 10 to 15 years. So just to start off quick, I'll show you a few shortcuts of how to go over these on a daily basis, or at least what I do. Now, I do subscribe to eSignal for most of my daily charting. And so if I was going to look at, say, the first list that we had here for today, this was for Tuesday, October 24th, and we had shallow pullback longs. So these are stocks that are in minor corrections in strong uptrends. And you can see we have Apple, Amazon, Biogen, BITA, DGAS, PRGO, SQM, WTW, and WUBA. Right now, we could easily go to the charts and just kind of type in a symbol and look and see how it plays out. All right. So in theory, again, the stock has been in a strong uptrend at least for 2 or 3 weeks, and here was the pullback that's happening here. It's basically you have your 20-day moving average you have a 10-day moving average above a 20-day moving average, and the stock price was in an uptrend and it's pulling back. So it kind of made the list there. Amazon, again, it was in an uptrend for at least 2 or 3 weeks. The 10-period moving average is the blue line. It's above the red one, which is the 20, and the stock pulled back, and it makes the list. For those of you that are part of the trading service already, you know that I took a long in this stock this morning because it came back in after being down 4 days in a row. I was looking at this bullish gap right here between 1965, 1970. It looked like it could be a good support level. Earnings are coming out on Thursday in about 2 days after the close. And I just felt that if, after 4 days, it was probably going to stabilize. The market was also flat on the morning, a little higher. So it just looked like there were a couple of bids that would have come into play here. I waited out the first, because I just switched to a 5-minute chart. I waited out the first 15 minutes or so, got an opening reversal after price checked back to the prior day's close, got this little reversal bar here, came back up to the opening range highs, and went long right around the 971, 972 area. And you can see it kind of made a nice little bounce back up to 980, which is where it started to break down below these 2-week lows right there. But nonetheless, we caught a nice 6 or 7 point gain for a nice little bounce. Hopefully we get some more upside in our earnings in 2 days, maybe back up to the 990 area, or this gap from last week, 995 would be really nice. Otherwise, it is what it is. We took a partial profit in it, and we're just kind of letting the rest ride for a swing. So we'll see how that plays out. Another stock was Biogen. And again, you could kind of take a look at this and say, all right, price was in an uptrend. It pulled back for 3 days. 3 or 4 days. It had earnings and it gapped down. So it's not a signal anymore. To me, that's not even a trade. This is designed to be for stocks and uptrends that are looking to continue their uptrends. They're not designed specifically for buying deeper pullbacks. BITA was another one. Nice strong uptrend, couple days of pullback. A breakout over these three-day highs here around 51.5, 51.75. Would be a nice re-entry on the long side to maybe retest these October highs. WUBA, I believe, was another one. Again, multi-week uptrend, 3-day pullback, breaks down again. It's not really something that I'm interested in trading today. So that's kind of just what I go through. And that takes, all of 3 minutes for me to just go through these charts and just quickly look at them. If you don't have a charting software and you don't want to spend the time typing out each single one individually and looking at them, you do have the option, because this is set up a certain way, you can just highlight these stocks. And whether you right-click on the highlights and choose copy, or you can hit Control C, that's C as in Charlie, Control C on your keyboard, that will copy the list. And from there, you can actually go to like a quote screen if you do have a charting software, and drop the names in using Control V as in Victor, or just right-clicking and pasting. If that's something that you don't have, that's not an option for you. I also subscribe to stockcharts.com. And I believe even if you're not a member, you should have access to what's called a candle glance. It's one of the choices in their drop-down menu. And for candle glances, I can do the same exact thing. If I hit Control V, it's going to fill in the names automatically for me. And I can just click on Go or Return, and then you get all these like little snapshot charts from the last 2 months on the radar. And again, this is another way that I do it when I have more than just a few names that I really want to kind of look at. So again, Apple, I look at this. I can see the 50-day moving average, which is the red line, is kind of acting as resistance there. So it's just something to watch. If it starts to get above 157, 158, I might consider a long to fill into this gap. Here's Amazon, pulled down, holding around the 50-day moving averages, that prior gap. It looked like a good trade to me, so I took it long this morning. Biogen pulled back, broke below the 50, tested the October low, and got a nice little bounce. These are just kind of things you're looking at. Today, Bitatu is really not in play at all. The DGAS, which I believe is the gold-weighted ETF, just kind of chopping around in the lower half of this range right here. Perego, again, sideways consolidation, didn't really excel higher out of this uptrend. SQM, this was on the radar today. Nice holding the 20-day moving average, kind of a triangle pattern, really tight, narrow range, and broke out above the $59, $60 area. And on our trading service, we did get long, for this breakout here, because it looks like it is going to, after a strong run up in August and September, and resting a few weeks, it does look like it could potentially continue into new high ground for a breakout over 63, 64. So it does look really nice as a swing long above the recent lows around $59, $60. Weight Watchers made the list as well. It's okay, it broke down below the 15 to 20, and now it's reversing. This is actually a really strong signal. So this is why you want to keep these things on your watch list throughout the day. You don't really want to kind of jump into any of these setups immediately. You're creating a watch list or a focus list. And then throughout the day, you can kind of just look and see if support held, or if a reversal action held right here. And it looks like to me that Weight Watchers, could potentially be a good long trade on a swing basis. WUBA, or 58.com, again, pulled back down to the 50-day moving average, holding the 64 support level. If you like buying weakness, this is an area. I would prefer to wait at least until tomorrow to see if it can hold it again, rather than be the first guy in all the time on a breakdown. But again, this is kind of just a quick analysis of, what was that, 9 stocks in just a matter of minutes. And it's the same process that I go through each day. Under my comments under BlueChipTrader, I don't highlight all my stocks that I find interesting each day, but I do this, and I do keep track of them on a piece of paper of about 15 to 20 stocks that I'm monitoring, or that I will set up a specific alert for me to for a scan to pop up on my screen when a certain price level is triggered. Again, I could just do this for, these are going to be the power up scans. Power up are stocks that are up at least 3 days in a row on some sort of increasing volume over those last 3 days. And you could see ADP was up 3 days into a row. 3 days in a row. CNC was up 3 days in a row. Capital One, Edwards, Lululemon tried to break out yesterday, up 3 days in a row, pull back. So this would be something on my radar as well. Nice strong run up after multiple days, pulling back, trying to break out. If it starts going above 64, 65 again over the next few days, few weeks, maybe into month end, could be a good long position. MOH and NEE, VFC had earnings, another one you want to kind of watch. BMW up multiple days in a row, very strong stock. I tend to avoid stocks that go up, considerably for like 2 weeks in a row. Usually they result in some sort of sideways consolidation pattern. I prefer to buy more of a pullback or a breakout in this case. And then Walmart, you can see, also made the list. So this is just really kind of basic, easy stuff. And like I said, you can just kind of highlight it. If you're more of a swing trader, you might want to be more interested in focusing on these weekly scans that come out here. So these are going to be inside weeks. And if I just do a copy of these, I could drop them into this candle glance here. So inside weeks are obviously going to be stocks that are in some sort of trading range over the last 5 days or so, or maybe it's even longer in some cases. So you can see AMT has been right here between a trading range the last 4 weeks. And Darker Petroleum, really nice trading range here. Definitely one I want to keep on the radar now. Holding support at $47, $48. Potentially could break out above 50. Best Buy seems to have resistance around the 58 area the last few weeks. Maybe it rolls over, maybe not. We'll see. Google, it's kind of in this sloppy little range here, pulled back. HP, Mac, Mylan, PANW looks really nice, held at 20. Just kind of look at these real quick, and anything that's sticking out, I'm just going to kind of be like, what, let me write this down on a piece of paper, and I'll go back to it later on, or I'll set my alert above a resistance level or at a support level. And the next day when the market opens, I'm going to wind up looking through the headlines, see if there's any news, an upgrade, a downgrade, earnings reports, see any sort of catalyst that I might have to be aware of that's going to trigger some sort of nice momentum on these things. So that's basically most of these scans. A lot of them are self-explanatory. You can kind of just go through them. This tight consolidations is similar to inside week and doji week, except this is it's a combination of days and weeks going sideways. So if I just kind of showed these names, these should be tighter, more tighter ranges than what we've been seeing. So again, AMT made the list, no surprise. Baidu is actually, for a $265 stock. This is a pretty narrow range here for about $10, considering how much it's ran. Budweiser going into today was a pretty narrow range. EMN was going sideways for about 2 weeks. Looks like it's showing some nice strength today, up about 2%. INSEE's not doing much. Chem is a really strong stock. Nice little consolidation, bull flag pullback that should be monitored. If it breaks out above 27, it could be a nice trade there. Marriott, perfect example of what I'm looking for. Really nice tight consolidation over the last week or so, and then trying to break out today. And then Tiffany's, which is another great example of another point I wanted to make about the scans. So here you got a nice sideways range for about 4 days. It's holding the 20-day moving average. I don't know when earnings are. I wonder if that's going to be the catalyst for this. Let's take a look at this quick. Type in TIF, and we can see earnings are going to be November 29th before the market. So if we go back to the scans here, I do want to show you, Tiffany's been on my radar for this week, because if I go to back to the TA scans for Monday, which was yesterday, I could see Tiffany was the last one on the pullback long scan, right? And this brings up another point that I wanted to make, is that any stock that shows up on multiple areas of this table, I give extra special attention to. So for example, this is a little trick. If you don't know it, you can search for anywhere on the page for a certain word or a ticker symbol by hitting Control F as in Frank, right? And you could type in TIF, and hit enter. And it would tell me right now that there are 5 results, and it will also highlight them in yellow. So I can see right now that Tiffany's is actually a shallow pullback long yesterday. It was an inside day yesterday, going into Monday. It was a doji week, which meant there was a really narrow week before where the open and close finished tightly together. So that's a volatility contraction, meaning that it could potentially be setting up for a more stronger directional move out of this narrower range. And it was also a tight consolidation, which obviously we just saw. So, when I look at something like that, I kind of put it on my radar. And to me, there wasn't really anything to, take action for it yesterday. So if we go back, this was what we were going into to start the week. But what I did notice is that we did have a gap resistance level right here in the 95 area. And it seemed to be holding pretty well going into it. We did have an uptrend. The 10-period moving average is above the 20-period moving average. We did have this inside day on Friday inside this range, and we did have a small little pullback in context of this uptrend. And you can always apply other indicators. MACD is going further north. RSI is trending above the midpoint 50 range, suggesting there's an underlying bullish tone to the market, to the stock. But there really wasn't anything to do come Monday morning when it just kind of tagged 95 and then sold off. It's an outside day reversal, but to me, that still didn't negate any of this narrow range activity that's been going on. I can also show you over here on the weekly time frame. So over the last year, Tiffany's has actually been, actually struggling with this $95 area. And you can actually see on the weekly chart here that this is a doji. This is where the open and close are extremely tight. And this range was actually one of the more narrower ranges that it's seen over the last few weeks. So it just means that the stock is setting up for some sort of bigger move. Now, earnings aren't out till, I think I said November 9th. Is that correct? So maybe that's the catalyst that it needs to break up above 95, 96 for a long entry. Maybe it breaks out ahead of time. Who knows? But it's definitely a name that's on my radar right now. But I'm not jumping the gun. There's no reason for me to actually get involved with it because I don't actually see any momentum kicking in. But again, it's just kind of the way to find nice, good, clean types of setups. Let's go. I have a checklist here. So just in case you didn't know, and I don't think I mentioned it, was the universe of stocks that are being scanned. Again, I do like liquidity, so the daily average volume for all these for the database has to be 1 million shares over the last 20 days. And in order to get the volatility that I'm looking for as a swing trader and day trader, the ATR, or the average true range, has to be greater than 1 point. So that means that these stocks have to trade a minimum of 1 point over the last 14 days on average. And that's going to give you these more momentum type of stocks. You're really not going to see names like GE on this list, or any sort of really, really thin traded stock that's just kind of skyrocketing unless the volume is there. So it kind of just keeps it to a database of about, I'd say about 300 to 400 stocks, a universe of that big. And it kind of just narrows it down for you. But again, the key thing to remember is that I do every day is to first look at the overall trend of the market based upon the SPY signal, and then I kind of focus in on the charts that are confirming or within a bullish context, I should say, in order to find those better setups for today. So I showed how to view the charts, how quickly go through them. Again, overall, if you find a stock that is in multiple scans, I would take special notice to that. The other good thing, too, about these scans is sentiment. Sentiment plays a big role, and you're going to notice that on some scans, I tried to limit them to around $20 or 20 results for each scan. If it's more than 20, 25, I'll have to up the parameters on the ATR or on volume just to narrow down the results. Otherwise, this page will be a little bit too crazy, especially on days where the market itself goes through the whole broad market goes through a correction or or an uptrend or a breakout. So definitely I have to fix the parameters a little bit to make this table manageable. But if you look recently, we did have going into today that there were a lot of wide range breakdowns that outnumbered the number of wide range breakouts. So again, that's just something to take note of. And if you really want to dig a little deeper, and you're familiar with your tickers, and what kind of you can actually tell what kind of sector they're in or what group they're in, you'll see that these trends are kind of showing that there's money flowing out of particular groups. So when I look at these wide range breakdowns, just at first glance, I could see that we have energy stocks like Halliburton, NFX is there, PNW is a software stock. We have a biotech there. I believe XOG is is that an ETF, energy ETF? It's extraction oil and gas. I don't know if it's an ETF per se, but again, you can see it's kind of this wide range breakdown. But I'm seeing energy stocks on the breakdown list. So it's just kind of telling me that the energy sector is acting a little bit, probably a lot poorer lately than it should. So I can go to the XLE, I can go to the OIH, the XOP, I know is an ETF there. You kind of see that they're kind of just rolling over the last few weeks here in October, not really doing much for anybody. So again, it's just kind of something to look at. Overbought names. Obviously, we have names that broke out recently on earnings: Adobe, VFC, Walmart. Here's the diamonds. So that's interesting. So again, we're in an uptrend, and the diamonds are there, and it's telling you that the diamonds is trading above its 5-day daily average, and it's just looking very extended to the upside. But at the same time, overbought. You have to remember it means there's strong demand for it. So unless you know what you're doing and you know how to hedge properly, or you're trying to short it, you got to be real careful with this type of things. Going contra trend or against any sort of momentum is really difficult to do. It's usually much better unless you have to have really good risk management first of all in order to do that. But for the most part, if you're a beginner trader or even intermediate trader, you guys find out that it's a lot easier just to stick with the overall trends and the overall momentum. I know you've probably heard it 1,000 times before, but there's a lot of truth to that. And then again, 20-day moving average, 50-day moving average is just self-explanatory. Don't really need to go over too much there. But if you can find a certain theme that's going on, a certain sector, and put it all in context, it should really help you establish an overall bias for how the market is behaving. The last two that I want to kind of focus on is zippers, which again, I said it was strong. It's really strong up momentum and trends in stocks that are under $20. And if we just kind of copy and paste these to the group of candles, take a quick look at them. Again, these aren't your typical fly-by-night, one-day wonder type of stocks that pop and come in the next day. These are usually stocks that go up for a few days in a row on a heavy volume, breaking out to some new high above resistance, and they consolidate and they hold above their short-term moving averages, or they hold above their breakouts or their gaps. And yeah, they might go sideways for a few days or even a few weeks, but overall they should be. If you like trading lower price stocks, these are probably one of the more I hate to say safer, but just liquid names. Let's just go with more liquid names that you can kind of rely on that are still carrying their upward bias. And if you can just kind of find a pullback to a 20-day moving average, or some other things that have been working really well for these are breakouts above a prior week high work really well. Pullbacks work really well. Consolidations for a few days and then you break out again. They're just kind of names. There's a gap test here that I just saw. Like right here, you pull back into the gap and it holds. Another pull back into the gap at this TRXC. these are just kind of names you want to just kind of keep on the radar. If you're into scalping, that's fine. But if you want to maybe swing trade these are also really good because you know that the underlying trends are really strong. If you're looking to time these a little bit better, you can actually take a look at maybe the intraday chart on some of these and apply just a basic oversold scan on it. So, for example, Ballard Power's there. If you were to go to a 60-minute chart and say apply an RSI 14, so Ballard Power has been on the list for almost the last 2 months, and there was a signal here when RSI 14 got into oversold territory and started to recover. So maybe that was an ideal spot that you could have got long around $4.50, $4.60, and held it as a swing over the next few days. ABEO has been on the list for quite some time, and you could see a few pullbacks to the $30 level in RSI in a 60-minute time frame. Could have provided a really a decent entry, if this is your style. There's so many different ways of technical analysis to apply to these names. FBR, I think, was one more. I mean, to me, this was a strong uptrend. This is a 2-3 day pullback right to the 20-day moving average. It would have been a really nice stock. And then you could just see here 4 days ago, FBR. Here was the pullback, oversold RSI on a 60, and it kind of made a nice recovery. And again, this works because the market is in a strong uptrend, as identified by the green signal that we have here. So again, just kind of play around with these, kind of figure out what works best for you. They're also really good for scalping as well, if that's what you're into. Bang for your buck, again, these are your fast-moving, high liquid names. If they will move at least 3 to 4% a day, and they usually trade some pretty hefty volume. So we can look at something like Wayfair. It's got a range of about $2 already, $67.40 down to $65.75 just in the first hour alone. And the volume is, it's enough that you can easily get in and out on. I don't really trade these stocks particularly because they tend to move a little bit too fast for my taste. But once in a while, when I see a really good setup on the daily chart, or for example, if I see it on multiple scans, if I see one of these names like Shop show up on a pullback long and it shows up on a doji week, those are something that I'm definitely going to take more attention to. But I'm also going to know that these names down here come with much higher risk based upon their higher volatility. I think that pretty much sums up the entire table here. Again, this is the table is designed to give you a snapshot. It takes about 20 minutes for me to go through this entire list each night or each morning. I do try to update it after the close or in the evening as often as possible. Every now and then life gets in the way and I do have to wind up doing it early the next morning. But for the most part, this list is updated a few hours after the close. And it takes me 20 minutes to just go through the charts. And even on the days where I'm too busy and I can't go through all the charts and the market opens up and I see the market's gapping down, this is my go-to list. I can easily go to any one of these stocks and say, okay, market's gapping down. What are the shallow pullback shorts? Or what are the overbought stocks? Or what broke down yesterday? Let's see if there's a continuation play to the downside. Or what's sitting around the 50-day moving average. I mean, I just look at these names immediately, even on the days that I didn't do my homework. So it's just a really good list. And I just think if you just spend maybe 3-4 days just kind of going through what I just showed you, you should really get a nice feel for it. So that pretty much sums up this table. If you have any questions, you can email me directly at, the email's right here. It's Scott Smith at tahscans@briefing.com. If you have any specific scans that you want to see or want me to create, maybe I'll add them into them. If you don't understand anything I explained today, feel free to, again, shoot questions there. And if you are on a trial and you would like to just take a 2-week trial and you have not ever tried this before and this is something you might be interested in, you can contact sales@briefing.com or go to our homepage and sign up for a 2-week free trial and take a look at this for 2 weeks and see if this kind of fits into your analysis. See if this is something that you might find useful and helpful. I know that on our trading service, I trade under the BlueChipTrader acronym, and I probably take at least 5 of my trades a week from this table. I mean, clean and simple stuff. I try not to make it too complicated, especially when I'm swing trading. But easily, I'm taking 5 trades from this a week. I found it just very useful over the years for just identifying some of the best trading setups that are out there. So I appreciate your time. Thank you very much for listening to me. And again, if you have any questions, that is tapagescans@briefing.com. And again, if you want to sign up, it's sales@briefing.com. Thank you.